Investors have been riding the PGM price rollercoaster over the past 12 months as the discussion continues to centre around the demand outlook as major producers work through inventories rather than bringing new production online. But in recent months, some bullish indicators have emerged, with prices for both platinum and palladium climbing back above the $1,000 an ounce mark respectively. Among the catalysts for the recent price action, analysts have cited the ongoing rise of hybrid vehicles, which continue to gain more market share compared to electric vehicles, which were nominally the darlings of the automotive industry, and the push towards decarbonisation. And in the latest report from the World Platinum Investment Council, there are 3 key material changes to the outlook for PGMs: developments in mine supply, automotive demand, and investment demand. Bridge Street Capital analyst Dr. Chris Baker believes that while it's clearly been a pretty tough time for the PGM miners, there are some interesting dynamics on the demand side that are starting to emerge.
But let's look at what this catastrophic failure in platinum group metal prices has done to the industry. Like most miners, they're reluctant to close down mines, but slowly, this has had to happen. Over the last little while, we've seen the closure of an Eastern Limb Marinsky mine, the Two Rivers Marinsky mine. It was completed. It's now in care and maintenance. The Western Limb, the Marikana 4B shaft is closed. Ramp up of one of the Bafokeng mines has been delayed. The ramp up in the Coney mine, owned by ARM, is being delayed. And I think a very important issue, and particularly because it's mainly a palladium producer, we've seen the Stillwater mine being flagged for potentially full closure. At the moment, Sibanye talking about bringing production from 450,000 ounces down to 260,000 ounces, and the dreams of over 600,000 ounces are long gone. This is mainly a palladium producer, as I said, and this really will constrain things quite dramatically. And I think the other question that needs to be looked at from the supply side is what's happening to the Russians. Russia is a very large producer of palladium from Nornickel. Curiously, despite sanctions, Russian supply is still seeing global markets. Even the Americans are seeing Russian metals for use in their vehicles. And we've just seen in the last couple of months, 2 Montana senators, that's where the Stillwater mine is, they've just introduced a bill to curtail imports of Russian metal. When that happens, or whether it happens, remains to be seen, but that could really be quite an important supply shock.
ASX small cap investors looking for exposure to the PGM space can look to emerging producers both within Australia and overseas. But PGMs by and large are a complex group of metals, so formulating a viable go-to-market strategy is critical and can also be a useful point of difference. And according to Dr. Baker, there are distinct advantages to focusing on South Africa as a leading PGM jurisdiction.
The trivial answer is, this will just go perform like a gold mine and it'll all be fine. Platinum is a challenging metal, platinum group metals, and the route from mine to market can be somewhat complex. The bulk of the world's PGMs come out of South Africa, as we know, and they have a fully integrated industry there, run by 4 or 5 major producers. They're able to produce from the mine all the way through to refined metal. Some of the doré metal goes to other refiners, but generally it's has been established for 100 years. It's a very orderly market. It is South Africa, so we've seen some disorder. We'll talk about that in a moment, that things seem to be on the mend in South Africa. So for me, the reason that we particularly focused on the South African industry and South African opportunities is that supply chain is well established. There is no point in finding a very large resource in PGMs without a smelting solution. And I think this is for all the really great work, for example, Chalice is doing, they don't have as yet a means to get to market. They talk about producing a marketable concentrate, but we haven't heard a lot about payabilities of that concentrate. In South Africa, on the other hand, you produce, for example, Southern Palladium, a company that we know well. They're proposing to produce a chrome-rich PGM concentrate from the UG2 reef. A lot of platinum comes out of the UG2 reef. That will be readily marketable to any one of 2 or potentially 3 smelters within South Africa. This is critical. Again, I don't want to be critical of the excellent work that the Aussies and other global explorers have been doing. Chalice, Bravo, Platinum Group Metals, these guys are doing some great work, great exploration, great resources, but finding a path to market is absolutely critical. These projects need smelting solutions. In South Africa, if you're mining from the Marinsky or from the UG2 reef, you will have access to markets.
Southern Palladium continues to advance its flagship Bengwenyama project in the Bushveld. With a pre-feasibility study on schedule for completion in December, the company's recently flagged mineral resource upgrade included a measured resource of over 2 million ounces for the UG2 reef. And as Dr. Baker points out, the encouraging results from the scoping study would peg Bengwenyama as one of the bigger mines on the eastern limb, something he believed fully vindicates its Tier 1 status.
This is a quality asset with now over 30 million ounces of resources, mainly platinum and palladium, a good helping of rhodium. Cash costs they're talking about under 800 US an ounce, 30-year mine life or more, as I said, and a post-tax NPV using what I consider to be quite sensible commodity prices of about 1 billion Australian dollars. I mean, this is an excellent project, a very valuable project. So where to from now? They've finished their drilling, they've got their metallurgy sorted. That's looking very encouraging. It is a high-grade deposit, as I haven't said. This is really one of the higher grade UG2 projects on the eastern limb. So the next step will be to produce a pre-feasibility study. The scoping study was of high quality. They've been able to incorporate more drill results, and so they'll be able to come up with reserves. And we're expecting that pre-feasibility study to be announced within a few weeks now. Towards the end of October is the latest projection the company's made. So that hopefully will be similar metrics as we've seen in the scoping study, but it remains to be seen. After that, key issue will be permitting, getting all their power and water permits and ultimately their mining right. And at the moment, they've flagged that that's going to come through sometime towards the end of the first quarter of next year. So everything looks to be pretty well on track to allow these guys to move towards. Once the pre-feasibility study is complete, they can then start talking to potential partners, potential financiers, and then, of course, the trigger point will be grant of the mining right, and that will allow them to move towards a final definitive feasibility study, then final financing, construction, and then into production.
There have been calls among those in the industry for PGM pricing to closer reflect the robust fundamentals of the market. And as Dr. Baker highlighted, the future direction of the market is subject to a number of interesting supply and demand factors. As the outlook further improves, prices for palladium and platinum are expected to follow suit. But Baker also noted that for ASX small cap investors, the macro environment is only one piece of the puzzle. For investors also need to look at the specific attributes of each PGM project, such as quality of mineralisation and access to infrastructure, to guide their investment decisions. And in that environment, advanced PGM players like Southern Palladium will continue to be at the forefront of investors' minds.